welcome to this edition of Forex Daily Dimes. I am your host, Josh Lilquist. Thanks for stopping by. Today, I have a special guest with me, and he is another repeat offender, Mr. Scott Maragioglio. How do you do today, Scott?
Great. How you doing, Josh?
I'm doing really good. It's always great to be back talking about the financial markets, how they work, just different concepts and techniques that people that are trading and investing, all the time, just what some things that you've known. And you're a CMT, right?
Mhm.
And what is a CMT, just so our viewers can understand that?
It's a chartered market technician.
Okay.
So the CM's designation granted by the CMT Association.
Got it. And so you had to pass a bunch of tests for, was it technical analysis?
Yes, technical analysis.
Got
So
it.
the science of supply and
Okay, cool. Now, you've been talking a lot about market breadth. Breadth, that's a tough word to say. Breadth,
demand.
right? And can you just explain what that really is and how can an investor utilize that to their advantage?
Okay, so market breadth is something that we track using something called the AD line or advanced decline line. It's really simple. It's just a running total of advancers versus decliners, charted out on a day-to-day basis. So when we track breadth, all we're trying to do, it's really a proxy for money flow. So if you're trying to assess whether or not you think the market's going to continue rising, falling, or whether or not you have a break in the market, you think it's a correction, or if it's the start of a real bear market, one of the things you would reference is the AD line.
AD or AB?
AD, advanced decline.
Got it. Okay.
All right, advanced decline line. Um, so just think of it this way: if the market's driven by supply and demand, which is the way it is, then if we can track or at least have a pretty good proxy for the flow of money, we can start making some guesses about what the market might do. Now, usually, um, the 80 line is coincidental with stock prices, and meaning that when the 80 line advances or goes up, the market moves along with it. So they kind of move in unison most of the time.
Hmm.
When it's actually really interesting to us as traders is when the 80 line does something different than what the price action does in the index. So
Okay.
if we're thinking about the flow of money and we think about it as a rising 80 line would signify bullish pressure and a falling 80 line would signify bearish pressure or outflow of money from the market, meaning the supply demand equation is changing. If there's a divergence between price and what the flow of money is doing or the bullish and bearish pressure, then that gives us a heads up that something's about to change.
Okay.
So it works both ways. You can have a bearish divergence or you can have a bullish divergence. So a major market top would typically be signified by a divergence, a bearish divergence in the advanced decline line. Like it might be going down while price is still going up.
Hmm.
That's like a raging signal that there's a problem and that you're ready to form a top.
Okay. So what are you seeing right now? What is that kind of indicating right now? What is it showing right now?
It's very bullish right now. And what we've actually seen is the other type of divergence, which is a bullish divergence. So what we've had is recently we had the 80 line make another new high ahead of the price action. So the advanced decline line has gone out to a new high, all-time new high, and the stock market was in a corrective, mode. As it started to turn up, the 80 line made a new high. That's a bullish divergence. And I made a comment earlier that in my 30 years of trading, and this is anecdotal. I haven't done a study on this, but it's anecdotal. I've never seen the advanced decline line form a bullish divergence and not see the S&P make a new high.
Got it.
So I think it's a pretty safe bet for me, at least, that the S&P is going to make another new high right
Because we're seeing, I mean, it was getting pretty close. I think today I can pull up a chart
here.
here. We can peek at that. But the S&P today is darn near at that on-time high again.
Yeah.
Currently, today's Friday the 16th, and we're currently in the SPY or the SPX 3510. So it's getting pretty close there.
Right. And none of this should be a surprise. I mean, if we're tracking the 80 line and we're really kind of getting a grip on what money flows coming in, it shouldn't be a surprise. I mean, the Fed's printed so much money,
Hmm.
and if you look at money supply numbers from the Fed from the Fed database, you just see a huge surge in money supply since this COVID situation popped up. So they have stimulated. We were already in a stimulative environment before COVID, and they just went off the rails. I mean, they just completely poured money all over this thing.
Oh yeah.
So it's no surprise that this is just going to keep manifesting itself in the stock market. You know, I'm working on the assumption right now that this is all going to end in a real large bubble at some point. We'll see. I mean, that's kind of what I'm thinking.
They've been talking about a bubble for several years now, though.
Oh, I mean, we definitely. I haven't seen a market like this since the '90s,
Yeah.
and things just got really crazy. And I think you'd be surprised at how much crazier it could actually get. So we'll see. And bubbles aren't good. I mean, they end poorly. Trust me. But we can make some money if that premise is correct, and we see a bubble have a sharp expansion at the end. It can be real profitable. Going in both directions. The bubble, expanding to its max and collapsing. When it collapses in on itself, which bubbles do,
Mm-hmm.
that's also very profitable.
Got it. So with current market conditions, you can use these as indicators, and we all know that nothing is perfect in this world. But if you're using that as an indicator, that's your bias right now. I'm assuming is a bullish bias. It just can help investors, for our viewers that are watching, using these indicators and just having a bias. But you have to have the proper plan
Absolutely.
for your strategy as well.
Absolutely.
So, with these current market conditions and the election coming up, by the way, if anybody watching right now, if you have questions, feel free to type any questions in the chat for Scott to answer. We can answer those as we go. But with the election coming up, that's a topic that everybody's talking about. This isn't a political show by no means.
Yeah.
But what do you think in the next few weeks here up until then? Do you think we'll continue to see more volume or, sorry, more volatility? Or what are your thoughts on what could happen here?
Uh, if I had to use the last election as an analog, um, the assumption is that according to the polling numbers and everything else, I think Wall Street's making the assumption that Biden's going to win the election. I don't think either one of them is viewed as negative for the stock market. I mean, Trump has clearly made an effort to stimulate the market, and that's been one of the cornerstones for his presidency. So
Hmm.
that's not a bad thing for the market. And I don't think they see Biden as a problem for the market either. It doesn't seem to be. And I say that because the market's acting pretty healthy, and it looks like Biden's got a really healthy lead in the polls, at least.
Yeah.
We'll see how it plays out. Now, the only thing that can cause volatility or might be an issue is if what we saw last time is when Hillary, who was clearly supposed to win, according to the polls, lost. As we saw those polls rolling, the S&P got extremely volatile.
Yeah.
And things
In
got
the in the middle of the night did, right?
yeah,
The
like
futures S&P.
yeah, it got crazy. So we'll see. We'll see how that plays out. If everything goes as I think the street is looking for a Biden victory, and I don't think they're worried about that at all.
Mm,
So we'll see how it plays out.
yeah. So you're thinking it
Again, we're
doesn't.
not political at all. It's just
Yeah, in your soul, you think it doesn't really matter who's gonna
I don't
win.
think
That
I
we're
don't
probably
think
gonna see some more continuation,
yeah,
potentially.
I don't think they see either one of these candidates as a negative for the market,
Okay,
right? So it's just a status quo with Biden, and Trump's clearly been pro stock market. So I don't think they see either one of them as a threat.
got it. So like you mentioned with the S&P back 4 years ago, the futures market went very volatile in the middle of the night.
Yeah.
What can investors do so they're not so emotional in their trading and investing? What can they do to prepare for that volatility? And I mean, I'm assuming have some sort of plan, but what can they prepare for to protect themselves or just to have a proper plan to go into there?
Well, I mean, there's a lot of ways to approach it. I mean, if you have an equity portfolio and you definitely want to, in my opinion, you definitely want to have some experience trading futures and being able to work with those futures as a hedge overnight, these
Hmm.
overnight sessions. Um, I don't know if you talked about this before, but most of the motion in the S&P 500 happens in the overnight session,
Yeah,
right? And not during the day session. So you'll see, if you took the overnight sessions out, the stock market detrends quite a bit.
hmm,
So it's significant part of your trading and portfolio hedging would be using the overnight futures market. Also options,
sure.
right? So we can use options as insurance and protect our positions, as well as speculate and create market neutral strategies.
Yeah. No, in the futures market, the margins they've raised them pretty high over the evenings. I think the Nasdaq overnight margin is what 15,000 or something. It's a hold a position overnight. Is there any other alternatives people could use? So all that capital, I mean, let's just say someone doesn't have that in their capital. They're using the leverage, but they don't have the capital to required to cover that margin overnight. Is there some alternatives people could potentially
Well, I
use?
mean, you can go into the options market and use, it's going to require a lot less capital. I mean, you still have to. If you're using it as insurance, you still have to pay for your insurance,
Sure.
but the capital requirements are significantly less. Um, and you're just buying those options outright, so it's it should be manageable. But if in the futures market, I think for smaller traders, these new micro futures have been phenomenal.
Got it. Okay.
They are just great for small traders. I think that's one of the best one of the best products that's come out for small traders in a
Yeah.
long time. One of my big concerns for small traders using futures has always been position sizing issues
Sure.
and the impact of position sizing in a negative way on their portfolios. And futures make it difficult because of the lack of granularity. The new micro contracts really solve that problem.
Yeah, it's very similar to the Forex market where, I mean, you still have the set contract sizing,
Yep.
but like in the Forex market, you can get your risk down to the penny almost.
Yeah, exactly.
Where with these micros that the CME came out with, was it about a year and a half ago now?
Yep.
The contract size or it's much smaller.
Yeah, it's awesome. 10
So
times smaller than a mini.
well, all you have to do is add contracts if you want to add more position size, and that's how you can scale in, scale out. So there's just more opportunities
Yeah,
there.
absolutely.
Now, with so we talked about the election, the market breadth. That's a tough word to say.
Breath.
What do you have any projects going on? Anything that you're working on? I know you do a lot on Twitter. You're teaching some classes as well, right?
Yeah, this week's the first class that I've taught in how's it been? 8 months?
Has it been that long
Yeah,
now?
probably 8 months, probably eight maybe 10 months.
How's it feel to get out of the house?
It feels good. I've been locked in the house for the whole COVID thing. So I've just been in front of my computer trading for a solid 8 months here.
Yep.
Yeah, no, it feels great to be back out. So we're back out teaching periodically now, and I've got other things going on. I've got trading projects going on in New York and et cetera. So
Got it.
we're pretty engaged.
Got it. And you can follow Scott on Twitter. Twitter handle is what is it? It's
SMARAGIO.
SMARGIO.
SMARAGIO.
There you go.
SMARAGIO.
We had a tough time with that earlier. If you want to peek at that market breadth you were talking about, where is that? You were just mentioning that not too long ago, right here. So if someone's looking for these indicators, does most platforms have that, or how do you
Oh
get
yeah,
that
it's
on
really
it?
common. I mean, what you're seeing right here is just what I put together in TradeStation.
Okay.
But almost any program's gonna have that available. That's old school stuff. That's standard kind of stuff.
Hmm.
If you look on something like say stockcharts.com, they would have that, or the internet, they'll have that available. Now, one thing I would say is this: if you're going to use that for a tool, I prefer to use the chart you're looking at right there is the S&P 500 breadth. I prefer to use uh, an index that's operating companies only. And
Okay.
most of the thing, if you look at breadth online, you might run into NYSE breadth. There's a little bit of controversy in the community about what they should use, what's better. I prefer using only operating companies, so S&P 500 is just regular companies. The
Sure.
NYSE breadth has a lot of other vehicles, interest sensitive stuff, a lot of things that aren't stocks. So that affects it as well, and it can distort it a little bit. So I
Okay.
would use operating company only.
Got it. Okay. I appreciate you coming on the show here today to, throw some insight, some knowledge on these markets, what's happening and everything. Because there's a lot of things that people just don't understand or know about. I mean, it's not new, it's just a little bit different.
Yep.
So it just helps people with more confidence in their investing, whether they're trading stocks or options, futures, Forex, there's a lot out there. And I know you trade pretty much all of them, don't you?
Yeah.
Got it. So make sure to follow Scott on Twitter. Follow the YouTube show here. Give a thumbs up if you liked it. Any comments, definitely type those in there, and definitely subscribe. We'll be doing more shows coming up here. We had a couple guests this week. So until next time, retire young, my friends.